Afternoon, everybody. Getting in our recap here for today. Before we get into what actually occurred today, just want to point you back to yesterday, how we mentioned after creating this 3 drives and clearing buy side, breaking back below this 1 hour, it would become an inversion and now offer lower prices heading into today. We also had this breaker here on the hourly. So our interest was this area here. If I just go ahead and play out kind of what occurred today, you'll see on that higher time frame, these areas hold beautifully, and we got a pretty nice expansion lower and delivery just into some sell side targets today. You'll see here on that 15, how that hourly, and this is now the 15-minute fair value up as well. We create the power of 3 here in London. We're trading back into the high now of that 15-minute, just back into yesterday's opening price as well. From there, we break structure back below now this 15-minute fair value gap. And then you notice how we use that as resistance and continue to trend lower from there. So putting in the high of the day here in London, classic sell day today. As we leave this fair value gap, we create a new one. And this is also now that breaker. So this is why price halts here, finds resistance, and sells off. We had spoke about how Michael had shared his entry this morning. Some of you were asking, what it was that he was looking at. And remember now, we have this breaker we've created. We've created the power of 3 in London. And now as we follow price action, we see how all of the premium arrays that are being created are now being respected. So fair value gaps, holding, creating market structure breaks, getting retraded into, as you see. We're now creating YouTube models as we're trading back into premiums. So if I just were to drag this out and continue to see how these areas really hold us. Short-term high cleared. Creating that market structure shift lower. And then notice how these fair value gaps that get created just continue to deliver price lower and lower. So this right here, was a sign of very bearish order flow. So when we see that we break structure here, break of structure, give a retracement into a premium, we now create the YouTube model where we clear a short-term high, break structure again, and now one more time we break structure as we break below that 830 level, which is a key level for the morning power of 3. So we've broken below the 830 level. We've also now broken below this bullish fair value gap. So this becomes an inversion fair value gap. And notice how we break below that with now a bearish fair value gap. So a lot of things aligning here, leading to lower prices. And that's why we see price trades up into it once, one more time, just digging a little bit up higher into this up close candle, this order block. And from there, really sells off aggressively. And really it was off to the races from there. The rest of the morning was very bearish. And we just continue to now trade through all of these discounts and these sell side liquidity pools. On this whole run lower here, as we continue to follow price. So now on the 1 minute, after initially breaking below this low with displacement and a fair value gap, we would now expect this fair value gap to hold. So at this fair value gap holds us, continues to deliver lower. And from this moment on, really all the premium arrays and up close candles that get created continue to support price. So this was a real clean delivery today, and as we followed it live in real time, it was really just nice to see that delivery get put in place. When we start seeing things like this, where fair value gaps are getting created and they're breakaway gaps, so 1, 2, 3, let's see, 4, 4 here. 5 breakaway gaps get created as we attack this discount here. And this discount is just the hourly fair value gap. Or 15-minute fair value gap. So we have a 15-minute fair value gap here. And then we also have a 1 hour fair value gap here. So this initial run lower, this larger fair value gap is 1 hour. So we see how as we first now trade into that hourly fair value gap, we do it leaving behind all of these breakaway gaps. So at this point, we were expecting just a continued sell-off. Price was showing that it was very weak and heavy. So we would just look for now those signatures to continue. We mentioned how this up-close candle would now hold price. Because not only is it an up-close candle and we're in very bearish order flow, it's also aligned with the consequent encroachment of this hourly fair value gap here. So as we trade to its low, bounce back up, expecting it to become now an inversion. That consequent encroachment acts as resistance and continues to send us lower. After breaking back down and through now this hourly fair value gap, creating a volume imbalance, we notice how we created a new fair value gap here. Called out how this is where we would expect price to hold, because it's just respecting its most recent premium raise. And it's also trading back into, if I bring up our new week opening gaps, you notice how this new week opening gap level is perfectly aligned with that fair value gap. It's why it's important to remember these new week opening gap levels, because they provide us insights that many people may miss out on if they're not using them. So it trades into that fair value gap, gives us another break in structure. We mentioned we like this wick as a BPR because this price trades down and off of it, rebalances this candle. So once we break below it, it now becomes that balanced price range. And you see how the candle bodies hold there beautifully and continue to deliver us into sell side. So now this was a higher time frame sell side target. We tap into it once, give a bounce just back into a premium, So we continue to respect all these premiums. So we continue to say just beautiful sell side delivery here this morning. We respect this premium, break lower. No fair value gap here on the 1 minute. But as we switch between time frames, we now see that 2 minute fair value gap here. So after breaking through this low, that 2 minute fair value gap gets created. Continue to break lower. Now we respect premiums, So really just look at how all the premiums that get created continue to be respected as we deliver lower and lower. At this point, we had cleared a low and returned into a 15-minute fair value gap. So if you remember, just to show, that's this 15-minute fair value gap here. And now this high is the high of this breaker. So we've returned into a higher time frame breaker and a 15-minute fair value gap discount. After trading into that, we fall just short of its low and start giving this small retracement. We had mentioned how this retracement was going to be a false retracement, creating and engineering more liquidity, so a phantom trend line. And we were simply going to return into a premium before one more leg lower to fully close in this 15-minute fair value gap. So you see that idea played out beautifully where we return into this volume imbalance, candle bodies holding there. We then break lower, clear this low once more, and return into the low of the 15-minute. Notice how the candle wicks might go a little bit lower and do the damage, but those candle bodies hold that level beautifully. So really nice to see that there. From there, we were then looking for that reversal into lunch because we had this huge extended sell-off all day. So going into lunch hour will seek just buy side left behind during that sell-off. So you see we get an initial retracement, creating a short-term high, still respecting that original 1 minute fair value gap. We trade back into the 15-minute. Now we're consolidating into that lunch hour, slowly creeping higher and higher. And now during lunch, we finally start to run buy side. So we clear that short term here. Notice how once we break back above this initial 1 minute bearish fair value gap, that now creates an inversion fair value gap. And look at how perfectly these candle bodies hold there. So after we close above, candle bodies continue to bounce. Not one candle closes below that level. And we just continue to now rally up from there. As we mentioned, we would start to target just buy side left behind. So all of these short-term highs, every time that we're creating a short-term high here that gets left in place, it now can be used for liquidity later in the day. I had shared here in the afternoon. So after the lunch hour had started, cleared buy side, started rallying higher, right at basically 1 o'clock. We trade back into here, this bullish fair value gap, and now continue to rally higher. So I'm just seeing that we're putting in now bullish order flow. So I would expect higher time frame targets to start being met. After we break this high, I notice how we come and create this YouTube model here. So a short-term low gets cleared. Market structure shift higher. And now, right, there's a little fair value gap left in here, as well as now this volume imbalance aligned with that. So that's why I was confident go ahead and entering here. And our first target was simply just right on the 15-minute. I'll show you. We were looking for a return into this 15-minute fair value gap here. So you'll see that I get out basically at that swing high. So from this afternoon setup, right, this is our afternoon setup because we're starting to now break back above all of these premiums. So once we start breaking above them, we would look for them to offer us support. Don't forget as well, right, our new week opening gap levels. So notice how as we're breaking back above, look at this new week opening gap, perfectly aligned right here. So that's why I was very confident with this supporting price and continuing to send us higher. From there, right, we deliver into that target and we really trade into now another set of new week opening gaps. And that's why I was okay targeting that 15-minute because it was paired with our new week opening gap levels. So right, these levels will act as magnets on price. And when price is trading near them, it will act as support or resistance depending on narrative. You'll notice how, right, we hit that level. Look at the candle bodies respecting that beautifully. And then where do we go? We immediately just trade back into now the new week opening gap low. And from there, right, notice how we, right, just bounce back and forth. So hit that new week opening gap, bounce to this new week opening gap, bounce back up into this new week opening gap here. And going into power hour, really just consolidated. So not too much action here during power hour. I did want to mention, right, don't forget that during London, we also traded up into this new week opening gap as well. And this is the most recently formed new week opening gap. So when we see price start trending away from it, that's a good indication that at least for today, right, we could see that trending environment. Always important to have these new week opening gap levels on the chart, or at least reference somewhere that you could remember them. So that wraps up today's trading. Right, most of the action occurred obviously in the morning session here. Heading into tomorrow now though. So we spoke about how this may be potentially setting up a sell model to where we've cleared this low. And now this is sell side as well. But you have to be careful because if we go to a daily chart, right, just looking at this on a daily, well, we have now cleared a short-term low. We have broken structure at this high, and we have left behind this daily fair value gap. So notice how this candle's traded into it, but has now closed still above this daily fair value gap. So we really have to monitor this daily fair value gap going forward. If we find support here, then right, we would look for higher prices and buy side to be targeted again. Our opposing scenario, however, is, right, if we're going to just continue to kind of consolidate in this little area, this weekly range, well, now we are kind of putting in, right, a little seek and destroy. So a high, a low, higher high, lower low, higher high. So if we're going to continue in the seek and destroy manner, then this lower low would be inbound. Also opening up with a daily bearish volume imbalance. So it'll be interesting to see whether or not this remains open. Because as we think about on our lower time frames, if this was like a 1 minute, we would expect that this bearish volume imbalance, after trading into this candle, would repel away and close bearish. So we'll just watch that going into tomorrow. So remember, no morning stream tomorrow. We will hop on though for that second half of that FOMC announcement just to see how price plays out. And then we will stick around and observe the power hour together. So until then, have a good night and we'll talk tomorrow.